I went then to study my bachelor's and my master's in China. That was for me like a key turning point in my life.
Maxime Patas, co-founder and
head of business development at
Maison21G,
one of the fastest growing tailor-made perfume companies in the world.
a lot of people know that there's something wrong with keeping your cash in the bank account. Our parents' generation, most of them, they didn't think about that until 50 years old.
Every day you need to make sacrifices. Instead of spending that money, you may want to invest that money for the future. A lot of people say, oh, I would love to invest, to build wealth, assets, get abs. All these things need work, need sacrifices.
What would you recommend someone in their mid-20s or in their early 30s to do if they want to start taking control of their finance and their future?
Again, it's about priorities. Do they really want it? I started to learn Chinese at a very young age. It really opened my mind to another universe, the whole Asia that was completely different from Europe. Speaking the language really helped me to appreciate the culture, and it really made me who I am today.
What's the best advice you've ever been given?
One thing I apply and I think is very, very important is really to
Our guest today is Maxime. You're a co-founder of Maison21G. Maison21G lets everybody design the scent of your soul, a scent fitting exactly who you are, how you look, your vibes, and what you want to achieve in life. In this episode, we'll talk about developing a frugal lifestyle in your 20s, investing and wealth building, keeping up with the Joneses versus saving and investing for your future, and finally, we'll talk about entrepreneurship and valuing a business. So, Max, welcome to the podcast.
Hi, Kevin. Thanks for having me on the podcast. Very excited to start this.
Very excited too. So why don't we start with some context about your background? What are the key turning points in your life that define who you are today?
That's a very tough question to start with. So I grew up in the suburb of Paris in France, and I think what always drove me is growth. Like I always wanted to grow as a person and to grow businesses, to grow as an investor, to really grow. Grow is the key word in my life and in what I've always tried to achieve. The turning points that made me who I am today, I think is one of them would definitely be my trips. I went to South America, then to Asia when I was 17, 18. So I was really trying to get away as much as possible. And I started to learn Chinese at a very young age, Mandarin Chinese. And I went then to study my bachelor's and my master's in China. So that was for me like a key turning point in my life.
So you started to learn Chinese before you moved to China?
Yeah.
Or okay.
Yeah, I started when I was 12. So that cannot take credit for. It was my dad who pushed me to do it.
Wow, okay.
So at the time, actually, I was in love with anime, with Dragon Ball Z in particular. And so I wanted to learn
Chinese.
Very exactly. I'll come to that. So I really wanted to learn Japanese. And my dad told me that I will learn Chinese, that it's the same. Quote, he said it's the same. So it kind of fooled me at the time. And I think he really had in mind that it would help me much more to know Chinese in the future, to succeed in whatever I want to do, considering that China had exponential potential and growth at the time. So this is how I started to learn Chinese Mandarin. I didn't like it as much in the beginning because I still couldn't understand my animes. But I kept on going and I learned it, and eventually I started to understand better the culture, the language. I started to love it, and that made me want to go. So I did my bachelor's in Hong Kong first, and then my master's in Shanghai, in Tongji. And that was a key turning point because it really opened my mind to another universe, like the whole Asia that was completely different from Europe. And it really opened my mind. It really, I think, made me who I am today. I won't dare to say a citizen of the world, but not only a French person, but more like a pluricultural person that really strive in different cultural environments. Like I cannot stay in place. I cannot really stay in France. I cannot really stay in Singapore where I'm based today. I really need to have multiple culture to feed me.
What made you want to stay in Asia actually?
I think it's really so Asia is big, but at first it was China for me. So living in China and I think speaking the language really helped me to appreciate the culture and to understand the culture and to really deep dive into this country, this formidable culture and people there. And what made me stay is really that I was young at that time. And so I really could dive into it. and it became a part of me. So like when you're young, you're really like, you're learning a lot, you're taking everything in your mind, and you're building something for yourself. Then when you're a bit older, you're a bit more full in your head. So I think you have a harder time to learn that much or to like build up new concepts in your mind. But when you're young, it really forge who you become and who you are. And so China really became part of me, the language, the culture, the people, how people behave there. It's like, it really became me. So that's what I really loved.
Yeah, okay. Because it's very different from a lot of people who go to, you go to do a university exchange or maybe a work experience, and then you just go back home and you get back to your your kind of normal, safe life, which is what most people would do in France or in Switzerland or in basically other countries.
Yeah.
They would come, have an experience, kind of like live the life, and then use that on the CV to get a job where they are, but not actually fully embrace all the potential that these new economies offer.
Yeah, totally. I feel it's like it's something that was quite complex at the time, even building friendships, because as you just said, everyone was just like living after year after a job placement because they didn't belong. They didn't feel like it was home for them. So they were just coming and going. And so building friendships in those places is a bit more complex because you end up like having people living all the time. But once you find someone that wants to stay, this person will have a very similar mindset to you, because he will have embraced the culture and basically feel like home in this place as well. So really have embracing this pluricultural mindset.
Yeah. So you mentioned about living and kind of growing up in the suburb, having to be kind of on a budget. So let's start talking about kind of frugal lifestyle, but also wealth building and investing, which I know you do a lot since a long time, actually. And so the first question would be, what's your personal approach to money and personal finances?
Money is really a mean for something. Like it has never been a goal for me, money, to acquire and to like accumulate money and wealth. It's never been an end goal. And I think for that reason, I might not be the most interesting person when it comes to building astonishing wealth because it's not my end objective. But my objective still needs some money to fuel it as a mean. And therefore, I think when I drew out my plan on an Excel when I was 17 and making my budgets for my travel at first, I kind of liked it. So I always liked math and Excel sheets and financials. And so I started to deep dive a bit more into it and to start to make 10-year plan, 20 years plan, see what I could build by managing my wealth, my very little wealth at the time, doing so. And so, of course, I also got a lot of advice from mentors, from my dad, from other people that, were much older and that already had gone through these steps and realized that, okay, real estate is a very safe and long-term investing sector. And in Paris, in France, you are not taxed on added value on your main residence. And so that becomes a way to accumulate wealth and to gain added value on your wealth that is one of the most interesting in France, before cryptos, I may say, at the time. And so this is when I think I started, and also to say because my dad is in real estate. And so he taught me a bit of all the tricks and learnings. And so I started to invest very young in real estate. You start by buying a little garage, using leverage from the bank, 80% leverage, little from yourself. And then you sell it sometime after refurbishing at a little added value. That was like the first deal I did when I was 17. And that was my first step into real estate, into investments. And I think after that, I started to... So back to your question, sorry, because you talk a bit more about the frugality. I think that plus the travels, plus basically my long-term plans and everything made me started to calculate all these costs and things and started to live basically on a budget, which not necessarily means stingy or very close to my money, but just having things planned out. Everything was kind of budgeted on a monthly basis in order for me to save at the end of the month a bit of my money to invest it. It either in me, in my personal growth, be it books for trainings, blah, 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 or travels, or into real estate, and later on stocks investments.
Okay, awesome. So, and you also told me a couple of times that you had, you started these kind of yearly revenue projections, and then you were like, how can I save this year so I can invest, with the actual goal of one day become a full-time investor?
Yeah, totally. I think that was really my not my first dream. I think my original dream was really to have an impact on my community, on the planet, to really have something be not remembered of, because I don't so much care about being remembered, but more to have an impact, because I think that would fulfill me more as a person. So at the end, it's a bit of a selfish thing still, because it's to realize myself, but really wanted to have an impact. So that was the first goal. And then I started to think, I need to have the greatest impact that I could, that my potential can realize, right? That as me as a person, based on who I am, my drive, my network, the wealth I can build, how much impact can I have? And then I started to really look into the maximum impact I could have. And I thought that would be through having a fund at some point in my life and drive as much capitals as I can into this fund, and then drive those capitals into impactful projects. And so this goal of having a fund at some point in my life, impact investing into educational projects, or basically the UN17 goals, was my goal at the time, to really tackle all of these issues that society was having. That was when I was 17. And then I retro-planned back to my young age of like what I need to do on a monthly during these 15, 20 years in order to get there at some point when I'm 35. And so before becoming an investor, I thought I would need to become an entrepreneur, because what investors are doing, they are investing into projects, right? And so I really wanted to understand what investors were interested in. So return on capital, but also lots of investors are wealthy and are interested in investing in what is important for them. So I would need to find like-minded investors that would want to impact invest, right? And so I would need for that to be an entrepreneur and to really understand all the mechanics of a business, and on growing a business, and on making it successful. And so to do that, and to meet investors and entrepreneurs, and to really understand business life, I wanted to start with working in a venture capital fund. And so that's how I started. Then in Singapore, after my studies in China, and eventually became an entrepreneur much faster than expected, because the Maison21G project came into my hand.
Where do you think, what's the main reason you think you developed a growth mindset so early? Like, is it because you have an example at home that's building wealth or teaching you things? Is it because you actually have the opposite of an example at home? Is it because you have some friends who are in the field? Like everyone has a different kind of story. Or is it like an internal drive that you can't even explain, but you're just saying, one day I just understood I need to take an Excel spreadsheet, calculate some compounded interest. It's what happened with me, for example. Yeah. Like, I don't know why. I was just like reading 1-2 books about investing, and I started to like do this compounding on the Excel spreadsheet and think like, this is amazing. I love it. And I don't even know where it comes from. So what was the main reason for you? You think you had this growth mindset that early?
I think it's a very interesting question. I would need to introspect a lot to actually get the final answer. But definitely my dad was a drive. I think he's like a machine, right? Like, he wakes up extremely early. He's determined. Like, he makes shit happen. Like seriously, he's really, really driven. He has his really, really firm opinions. He gets things done. So I think that definitely pushed me. That was an early drive. He educated me. So definitely that was instilled in me. But I think then it's my own personal development environment that shaped it. And that came through, for me, growth is in everything and everyone and all the time. It's nature's realization, right? Nature is all about growing. Nature never stops growing. Everything never stops growing. Human grow, it's like cycles. And I think for me in my personal life, as well as my business, career mindset in life, it's always been about growing, because that's the natural next step. Is like you don't stay stagnant in anything you do. Anything you strive and want to make happen, you want to make it grow. Then it's the question is just between sustainable growth, high growth, like how you want to grow, the morality of your growth, etc. The impact and consequences of your growth, but everything needs to grow. And so I'm really driven in building, making an impact, and growing stuff that could be making an impact onto the society.
You said that you started investing early. You talked about real estate, but you also, I think, invested in some other things. What are the things that didn't work? Because usually you start and you basically fuck up. That's how you learn. So what did you start and fucked up that made you learn the investment game better?
It definitely, you always make mistakes. I think that's what shape you as well. So what was taught by my dad, that had like 20, 30 years career experience in real estate, was successful, because the guy knew what to do, took my hand, told me you do that, this, that, it worked. So that path was realized correctly because I had the right mentor to guide me. But I also wanted to do things by myself. So I explored.
Get there faster, make more money faster.
Yeah, exactly.
Real estate is too long.
Real estate is long. It's a long-term thing. It's safe. It's that
boring
stuff. Yeah. So at the time I wanted to burn the steps. And so I don't know how, I don't remember why, but the Forex guide fell into my hand. And so I went through it and I was like, whoa, it's super cool. And I understand it well. And I think I can make something out of it. But no, I did not. I realized that it was, after 1 year, I think, of trying, I realized that I lost not much, but more than what I had gained. And so I quickly turned the page on Forex. And I think it's also through another mentor that I had at the time, because I went to do an internship in Credit Suisse in investment bank. And the director of fixed income at the time, who was my boss, told me to give up on it. That basically Forex was not going to make me any richer unless I was going to be a trader at the bank. Yeah. So
tell us more about your frugal mindset and how it relates to building long-term wealth. And as an example, because it's kind of funny, like the other day you were telling me, oh bro, I only have like $300 to end up the month. And we actually both laughed because we both understood each other. Because I'm kind of the same. People think, oh, this person is making really good money, or they're building wealth, or they're investing, etc. But what they don't understand is that most people who are building wealth are kind of cash poor, or don't have too much cash. Because you might have a lot of assets. You might have a lot invested in your assets, but you basically count this as zero because you don't want to sell your assets, obviously. So how do you approach money on a month-to-month basis in relation to this investing? Because you just have this growth mindset and you just have your goals and at the same time you're in this very expensive city where, like, for example, you go out. That's a good one also. You go out and the girls go to the table of the dude who is basically keeping up with the Joneses, has the best, the one that has the best table is attracting all the girls. So how do you balance all that out? Because the guy who has the table either is already rich, but if he's already rich, either he made it already, either he's from a good family. But it's definitely not building wealth because that's not how you do it. So how do you balance this out? This frugal mindset and the living in a big city like that where everything is very superficial, expensive, and where there is kind of like game of showing off. That's what people do. But that's the opposite of what you should be, or of what people should be doing when they're building wealth.
I think it's all about setting priorities. So it really depends on what are your goals and objectives, long-term, middle-term, short-terms. I would lie if I would say I never went to clubs, I never spent that money on a table or on bottles or all these things that are I wouldn't say useless, but not creating long-term wealth. So at the end of the day, it's really about your priorities, and my priority being an investor as soon as possible, not retiring. I don't want to retire, but I want to keep on building businesses in a free way. So having lots of time freedom that would mean having lots of basically cash to sustain my lifestyle and to sustain my time, because time is money. The most important is to have time for me more than any cash money. And so time, you manage to get it by doing what you love, and doing what you love for me means accumulating cash and wealth. And basically to do that, you need to have priorities. So my priority is building up this wealth through investments. And that means that at the beginning of the month, to come back to your question of why did I have $300 left at the end of the month, is at the beginning of the month, I just take my salary, take all the money proceeds that I get from different money placement or money generating businesses, and I invest them. And so that's the first thing I say whenever I receive my cash. And so
that's what they call pay yourself first. So in the beginning of the month, you take 10, 20, 30, 50% of your salary and you invest it, and then it is not there anymore.
Exactly. Then I cannot use it anymore. And so that's why then I kind of spend my money, a bit freely on what you would call a leisure budget allocation. And that's why at the end of the month, I could end up at a very low level of cash, because I just spent it freely onto whatever could be fun on that moment.
Why so there is investing to say, I want to build wealth and kind of reach like financial freedom, or freedom of time, freedom of place as quickly as possible. Maybe some notes on that. The main reason why people should invest is not necessarily only I want to retire early or something like that, but it's more actually the cash that you earn is being eaten up by inflation. So you're losing purchasing power every year if you just keep your cash in the bank. And this is made mostly through governments that are printing money every time there is a crisis or a problem, and which basically devalues your currency. And at the same time as this is happening since decades and decades, you have what we call wage deflation. So the wage don't keep up with how much money is printed and how much the value of your cash is basically going down, which means that the cost of retirement, which is what we talked about, the cost of freedom or whatever you want to call that, increases every year. Because at the end of the day, retirement or financial freedom or freedom of time or of place is being able not to have as much cash as possible, but to have acquired assets that generate you a passive income. So it could be stocks, could be real estate, could be other
Ventures.
type of assets.
Yeah.
And so the problem is if the value of what you earn doesn't keep up with how much the cash is being devalued, therefore all the assets out there that you need to acquire this financial freedom are just going higher and higher, and you can't keep up. So you just need to work longer and longer. And so that's the main reason why most people should invest is not to just, people think they want to invest to make money, but it's actually to just keep up with the cost of retirement that is just increasing every year. And so you started, you're 28 now, you started, let's say 10 years ago, thinking about all this stuff. That's very early, actually. Even if you start thinking about that 25 or even 30 years old, it's fairly early. Our parents' generation, most of them, they didn't think about that until 50 years old, because first they would have a house and then you would have kids and you have to pay for all that stuff. And then you start to think, oh man, now my kids are out. Now I can start to think about my retirement. So our generation, we're much more self-conscious, and most of our friends want to invest if they're not doing it already. But because everybody knows that keeping this bank in the bank account, I mean, not everybody, but a lot of people know that there's something wrong with keeping your cash in the bank account. But most people don't really pull the trigger because they don't know how to start. So what would you recommend someone in their mid-20s or in their early 30s to do if they want to start taking control of their finance and their future? So maybe we could talk about education first, and then second, maybe some practical stuff that I could do.
I think first it's about, do they really want it? Again, it's about priorities, because a lot of people say, oh, I would love to, invest, or I would love to build wealth. I would love to own assets. I would love to get abs, but all these things need work, need sacrifices. And at the end of the day, it's not about wanting, it's more about like putting it in the work, like to basically do it. And so my advice would be to sit down, set up priorities and say, do you want to only live on this short term, on the moment, which is amazing, like I don't devalue that. It's the most important for me to live on the moment, as dull as it sounds. But at the end of the day, the moment, how many moments do you want to have? And I think longevity is a very big topic for me. It's very interesting, and I would love to live as long and as well as possible. And for that, it means you need to build up a long-term plan. And so that's just like how we said it. It means that every day you need to make sacrifices. So instead of spending that money, you may want to invest that money for the future. Instead of eating that cheeseburger, you may want to eat a salad a bit more often.
Basically, it's the concept of delayed gratification.
Yeah. And it also makes you, I think, happier, because you will build more endorphins than dopamine, basically. So you will be happier over a more durable period of time, instead of just like, as you said, like just gratifying yourself all the time and having super ups and downs from this dopamine surge.
Absolutely. So you all start with, do you actually really want it?
Exactly.
Maybe to actually really want it, first you need to be really educated. So like maybe you want to read 1 or 2 books about investing. Yeah. There's one really cool called Uncheckable by Tony Robbins. There's another one called Money Master the Game by Tony Robbins, which is basically the same, but kind of much longer, much more detailed, explaining all the basics about investing. Once you understand that, you understand everybody can do it. It's not that complicated. The financial world makes it complicated, so they still can justify their jobs, basically. But it's not that complicated.
Mentors also. I think what's really important when you're 20, because you're saying what should you do when you're 20, when you're thinking about it, is to go and find someone that did it already. Like there's so many people that are experienced out there and that can burn the steps for you. It's just the same value as having a network when you want to be introduced to this or that places, when you're building a business. The value of network is super, super important, because they will burn the steps. Yes, today you can go online, you can buy books, you can really make up and you need to also make up your own experience, make up your own knowledge. But being guided by someone who actually know and actually experienced any field for 20 years already is really necessary. It's the most important thing to do. So if you want to invest, go and find investors.
Absolutely. Go and do the thing actually. And one of the great way to start on a very practical side is what you said before. Pay yourself first. So every time you receive your salary, take 10%, 20%, 30% out and just invest it right away. And there's a lot of applications today that automate all this investing process and will invest for you in the stock market. And that's it, basically. It's just about starting. Same way when you start a company. It's just about starting instead of talking about it. Same as when you start a new diet. Same when you want to gym. Same when anything in life, you want to meditate. You want to start praying, whatever. Like, just start and see for yourself.
Start, experiment, optimize. But it's really about putting it the action.
Is it good to have a frugal mindset in the business world? And why? Or is it, or can it be, or is there at some point where it's actually not that good anymore?
First, to answer to, is it good? I think it's good because it makes you plan everything. So it makes you really organize yourself, budget and plan everything. And so I was mostly in finance and business development, but also on the financial side of the business. And so it makes you look at every single detail. You're basically an accountant, right? So you look at all details, all mechanisms that grow the business. And so this frugal mindset, basically what you mean by frugal mindset is really to allocate resources, right?
And allocate exactly.
So that is basically a financial or a business mindset, because it really makes you plan and strategize. And so I think it's the opposite. It's like, because I'm a strategist, I had a frugal mindset of allocating resources. And then basically being a strategist, you plan ahead every single actions you take and steps. You have objectives for each of them. You iterate, so you experiment each of the steps until you optimize to the number that you're trying to reach for each of your actions, each of your experiment. But the bad side potentially of being a strategist is that you don't always take action. because you basically sit and strategize for a long time before you can actually take an action, because you consider every single variable until you find the best hypothesis possible.
Paralysis by analysis.
Yes.
Yeah.
Very, very well described. And the good thing that happened to me is that I met Joanna, which you had on the podcast as well, who is my partner with Maison21G, the main founder, the main person behind this idea. And she's the complete opposite of me. I'm a strategist. She's a machine. She's a doer. She goes into things. It's also a problem for her because she doesn't, think things too long ahead.
Yeah.
She really she's more emotional. So she feels that it's going to work. She works with intuition and she goes into it, while I strategize a lot.
How has your mindset evolved since you started Maison21G in terms of personal growth? What's the impact of building a business in how much you evolved as a person?
That's a very tough question. I mean, there's so much to say about it, but I think the dealing with people is something that is very challenging on a daily, because when you start a business, it's just you, your partners, your ideas. But when the business starts to grow and be a bit more consequent, then you have lots of players to deal with. So you have the suppliers, the clients, the investors, the whole ecosystem to deal with. And so it's really this relationship with people, I think, that I grew with Maison21G while I was a bit more of a financial strategist guy in the beginning of this adventure. At the end of the day, you really have to put your hands in the machine. And so go and meet the customer, go and meet the investor, really understand who are these other stakeholders, what do they want as well, because that's how the business will evolve, is by satisfying all the different stakeholders of the business, the customers, the suppliers, the investors.
Can you tell us how Maison21G started?
Yeah.
And tell us also whether basically the idea, the product is the same today as in the beginning.
It changed. So I'll tell you how. So Maison21G started in 2019. The idea originally came from Joanna Monange, who was a creative director at IFF, which is a perfume multinational. They create fragrances and juices with perfumers and deliver those recipes to brands so that they can then sell to end customers. And so Joanna, by designing all these blockbusters perfumes like La Vie est Belle, 1 Billion, etc., started to get a bit bored because there was less and less budget, more and more budget constraint onto these juices. And the end goal of these brands were really to feed the mass. And so Joanna's idea was to go against that and to provide personalized perfume for everyone. For me, I was not so much of a fragrance person, even though I worked with Joanna at IFF. And so I had the jigs of it and I was interested in the field. What I had was more of my little experience in M&A advisory and fundraising advisory in a investment cabinet. And so from my perspective, what was super attractive about this idea was that other beauty industry had been disrupted. The skincare, the makeup, they had been disrupted with direct-to-consumer models, with DNVB, the digital native vertical brands. So basically online brands that were indirect with consumers, that were really engaging with the consumer on a personal level and understanding the trends and answering the trends and being really revolutionizing their industries. While in the fragrance industry, it was still quite of an old industry, with top revolution was perfume centered around perfumers, so bringing a bit more quality into the juice, etc. But at the end of the day, all the brands and the top seller in perfumery were based on an égérie that would wear it and that would say it's the best perfume, you just wear it. There was no transparency, nothing. So the discussion with consumer was not there at all. There was very little direct-to-consumer brands or projects in perfumery that were bringing transparency, sustainability, basically answering all the trends that consumers in the beauty industry were expecting. And so I felt like there was a huge gap. And so her idea was super interesting in a business perspective. And so that's where I started to completely deep dive into it with her, building up the business plan, the pitch. And this is how we went on a roadshow and started to raise funds. Originally, our idea was very much tech, because we thought our assumption was that consumers were wanting to have a very different retail experience. We're wanting to have something, as I said, revolutionary, so something very, very different. And so in this tech approach, we started the concept with Dylan, the third co-founder, that was really the technical guy. He's a machine in everything that is Web 2, Web 3, but also mechanical engineering. And so we built a machine called La Source that was basically an espresso of perfume. So we had capsules that were patented, that were containing the raw essential materials, and that basically when you put those capsules into the machine, click on the button, was creating your perfume creation. That was when we launched in 2019, Maison21G, really the center of attention. That was what was the brand. But ultimately, we realized that consumers loved the experience of crafting, of coming to the shop, of doing a 1-hour workshop, sitting down with a scent expert and creating their own fragrance by themselves with their own hands. And so the machine had zero value. The machine was not even good as a marketing tool. It was really, it became kind of useless. And so we had invested all these efforts, all this money into this assumption to revolutionize the consumer journey. But at the end, what customer was expecting was this human feeling, this human touch, this service, this education brought by a human person. And so we turned around that idea and we started to invest our time, efforts, and money into building up this workshop experience. And so that was a big turnaround for the company.
How long did you make to make this decision? Because you invest a lot of time, you invest a lot of money, and you also have probably like kind of your ego. I mean, ego, because you think you know what people need and what they want. You're going to disrupt perfume a certain way, and then you realize actually people don't necessarily care about that. So how what's the process there, like to make such a, like basically you call that pivoting in a startup, meaning like I'm just going to do something completely different or very different as long as it works. And so how quickly did you do that?
Very quickly. To be honest, we are not in love with our ideas at all. And as I said, the end goal is to satisfy stakeholders. It's not me, it's people, me included as a customer, but we need to satisfy everyone. And if people are wanting that, we need to change. And that's no problem to turn it around. It's not about conviction. You can have conviction, but they must stay assumptions at the end of the day, because you need to try them, you need to test them, experiment them. If it doesn't work, you change. You change quickly, you adapt quickly. That's the startup mindset any startup should have. Is to basically adapt to what is the demand.
Yeah, you have your North Star, but you don't know how you get there, and like you try something and you have to be very kind of low ego and just realize, I don't care, I'm just going to do whatever is needed or whatever people want to reach my North Star. And maybe my North Star is actually in the South or in the East. And so be it, as long as it works.
Yeah, at the end of the day, it's customer satisfaction. It's the number that are growing. So if the machine is not needle moving, then bye-bye.
Absolutely. So I think you guys raised about 7 million so far, and you played a significant role in this. So how do you value a business? Let's talk about valuing a business in the different stages of a startup to attract and close capital. So let's start with how do you value and justify a startup in a seed stage? Maybe you want to explain what a seed stage is first, and then explain how the kind of valuation and raising fund game takes place in that seed stage.
Yeah. So I think there's a lot of experts out there that can describe this a lot better than I do, but I'll tell you about my own experience. When you're an entrepreneur, basically you have this idea, this gap that you want to bring, this idea that you want to bring to life, and you need to fuel this idea with some cash, right? To build a team, to build the concept, to build whatever you need to build, the website, the store. And to get this cash, there's two possibilities. Either you go, you raise debt, either you raise equity. And so usually when you're a startup, it's very complex to raise debt. And so you will turn to investors. So the seed, there's multiple rounds of fundraising in a startup. And in jargon, you call it seed for the first one, and then Series A or pre-Series A, and then Series A, and then Series B, C, etc. As many rounds as there is into the growth lifetime of a company. But the seed round is really the original round of fundraising, and usually go to friends and families. That's where everyone is usually going, because that's the low-hanging fruit. That's really the easiest way to raise money, is through friends and family, because it's all about trust in the beginning. It's trust in the entrepreneur, that this entrepreneur is the MVP and will make this project to life and successful. So in the seed round, it's really, I think that the weight on why I would invest or not is really onto the entrepreneur himself. Of course, also on the project. So what is the project potential? So is this idea really revolutionary? Do I believe in this idea? Is it going to really be adopted by a large portion of user, of customer, etc.? And how fast can this idea grow, and what will be basically my return on capital? So there's a bit of at the end, investor, they want a return on capital, right? So they still look for, if I invest X today, what will I get, in 3 year, 5 year, 10 year, whenever the exit strategy is planned for the entrepreneur and the startup. And so then you talked about valuations. So in a seed round, in any round, basically, you build your valuation onto your enterprise valuation onto different methodologies. So the most common ones are, and depending on your business, there's several ones, but the most common ones are DCF, discounted cash flow, company comparatives, and previous transactions. So comparable, and previous transactions. So in a seed round, you can, based on your business plan projection, do a DCF, but it's not extremely relevant because it's very hard to predict your forecasted
basically.
Yeah, it's very theoretical. Yeah. And so you mostly base it on what are the industry multiples. So those are the other methodology, the comparable or the previous transaction. So you go into Bloomberg or you go through your network and find out what are the applied multiples for this kind of very similar company to yours. And you apply this same
in the same stage.
In the same stage. Yeah.
Is this, because this is still very theoretical, is it like, especially in a seed stage where there's nothing out there?
Okay, if you're pre-revenue, you cannot even do this methodology because those multiples are applied to revenue. So if you're pre-revenue, it's really
the team.
You can still do, a projection, a DCF, etc. But at the end of the day, again, it's about the trust. And so it's really a buyer-seller kind of situation where you say, my company is worth that much because I think the potential is that much. But it's really about trust.
So it's mainly how much leverage can you build as an entrepreneur, and this is mostly on what did I do before.
Mm-hmm. Yeah.
How successful was I,
yep.
And therefore saying I'm almost, by offering you some equity in my company, I'm making you a favor at this valuation, and then it's all a game of kind of supply and demand on whether you find the people who are willing to pay this price.
Exactly. You see, if you're comfortable to pay this price, then we have a deal basically. But you also have to consider that if your investor in seed stage is paying X, but that is not, then when you start the business, get revenues, you don't achieve the kind of growth that the investor was promised in the first raising round, your value will then decrease, and that's never good to show. So you have to be humble and also start with relevant valuations.
Yeah. How does valuation become easier to justify at a later stage?
Well, at the early stage, you cannot really much justify, as we discussed. So it's more about how much the person is willing to pay and how much are you willing to give out as a percentage of your company. Because basically, we didn't say, but if you're raising equity, then you will give out a certain percentage of your company to an investor. And so at a later stage, valuation becomes a lot more, not easy to define, but at least you have a lot more assumptions and more data and metrics that you can use as to build up this valuation that you made. So what you use is, for example, all your historical revenues. Then you draft out your business plan for the next year. And this business plan, the more data you have in the previous year, the more accurate this business plan could be or should be. As an investor, you will, of course, look at all the assumption, see that anything is credible as an assumption, as growth assumption. And then if it makes sense on what are the projected free cash flow for the next few years, then the valuation will make sense. you can combine this with also using the average multiple of similar companies in your industry and say basically the same company as me was sold at this price when she was doing that much revenue. So that's the kind of multiple that I will apply to my own business.
Yeah, absolutely. But at the end of the day, it's just at the end of the day, you probably have an idea of the valuation you want to get, and then you will go get the data and get the methodology that enables you to get kind of the next valuation that you're looking for. So it's basically sales.
It's basically sales, but you again, you don't want to be lying, over-promising or under-promising. So you want to be in the spot, and that spot is justified. You're right. I can build a 10 or 100 million valuation based on assumptions that I would put behind, but and it's then how well can I convince? How well can I back it? Can I back these assumptions? But
think a bit longer term, because the next round is not going to be justified.
Yes.
If you're too greedy in the short term and get an amazing valuation too early, you might think it's amazing, but it's actually not that amazing in the long term.
Because you're under-promising.
Exactly.
You're
over-promising, yeah.
And so this is really what you don't want to be doing. And so that's what we were really careful about, is to really put out their business plans and growth assumptions that were reachable for us. And then the valuation is just a calculation of this growth, this business growth potential. Valuation is just an outcome of it based on a multiple that's from the industry. And so we just use rationals that were realizable. And then indeed the huge work of an entrepreneur is not building up this valuation, is to actually do the work and make the business grow at the pace and at the level that was promised in this valuation. And so that's then the whole entrepreneur's work of like making the business grow.
Awesome. So there is a new trend since a few years that people are talking about, which is this crypto, blockchain, NFT thing. So what do you make of this crypto, blockchain, NFT thing as an entrepreneur in the perfume world?
Perfume oil?
In the perfume world. World. It's a hard one, man. It's a hard one. On a Wednesday at 8 p.m., it's a hard one.
Yeah. No, wait, before going into, I'll do a transition with crypto. With this perfume world, as you said, so what's the really fun part in my business today? I think is the growth. As I said to you earlier, it's like I'm really interested into growing stuff, into growing myself, personal development, but also growing my business. And so this growth is both looking at the numbers in details, but also going down in the shops, talking to the customers, really understand what's needed. And so in this growth, what I look at is 4 different leverage to grow this company. You will look at market expansion. You will look at new product developments. You will look at optimizing the productivity of your current stores. So that will be basically your market share penetration in one given market. So you don't build up new products, you don't open new markets, you stay focused on your markets, and you make your production factor optimize basically through optimization of the different levels of a store. So if you look, for example, for us of a perfume boutique, it will be growth of your top line, growth of your bottom line, so growth of your sales and growth of the cash that you get in your pocket at the end of the day, at the end of the month. And so optimizing those numbers is really a day-to-day for me, for us as an entrepreneur, is to really look at our growth funnels of customers and increase the traffic, increase the conversion rate of our customer, increase the top line and the bottom line of our stores. And so that's the market pressure. I talk a bit about it because that's really my fun. But another thing is also diversification, right? And so building up new product or launching even completely new products is also a way for your business to grow and also to hedge your risks because you're going to tap into new industries. And so talking about cryptos, because that was your question, today there's a trend on, all the luxury brands, all the beauty brands, they are trying to tap onto this new trend of blockchain and of NFTs. So of course, it crossed our mind to see what could be interesting for us to do in this environment. Is a metaverse? Is it the universe we want to go in as a perfume brand? Is it basically the real question was, is it going to bring value to our customers? That was the most important question, and we didn't want to go into it for a sole marketing communication purpose. And so,
which is probably what most of these big brands do. Every time there's a new trend, big data. I mean, AI now is different because it's very, very. There is like concrete, like very. I mean, there's concrete applications that are no one can ignore anymore. But you talk about data, big data, AI a few years ago, then blockchain. Like most of these big brands, they kind of like do something because it's kind of like a PR play. Like they need to say, "Oh, we're doing that. We have this department basically focused on that," but there's probably not much happening. Whereas you are a smaller company, so you need to make a decision on whether there is something practical there that can get out of it.
Super true, completely true. Yes, for us, it's much more practical. They have like massive PR budgets, so they need to be surfing on every trend and be in the latest news. To stay relevant for us is more practical in the way that we have much limited cash compared to these big brands. And so we need to decide where we're going to allocate this cash. Is it going to be really relevant to build up our brand, to build up relevance to our customer, and to build up market shares? And so we have this idea that is not yet activated, but we've started to work on this idea whereby we could allow customer to own their own perfume recipe. And so today, you cannot even own a perfume recipe. It doesn't exist. You cannot, as a brand of perfumes, we cannot go to the government and file a patent for a perfume recipe. It's not, you cannot have rights for it. So blockchain and the NFT technology could help us to provide this good to consumers that today was not possible to grant to customers, because you would give and authenticate an ownership of this perfume recipe to Mr. X or Mr. Y. And why is it relevant for our business is because we are every day creating new perfume creations to other consumers that come and make their own perfume recipes. And this would allow us to actually give you an ownership of this recipe that you have created. So it would belong to you.
It's much stronger.
You could potentially own royalties on it. You could potentially say that it's no longer for sale. You can potentially trade it. So
exactly, you can resell it if someone else really likes the...
Exactly.
Yeah.
So you could, of course, then give it utilities and access to a community. There's many things that you could do through the NFT tool. But the most important aspect is that we would bring value to the consumer by potentially giving the consumer ownership of this perfume recipe that he would create.
So what's the actual, to stay very practical?
Yeah.
What would be the main one or two kind of direct impact? Is it, you think people think it's so cool that more people will come by or talk about you? Or is there a way for you to actually make more money out of that? Like, what's the actual direct impact of implementing NFTs and tell people actually you can own your own recipe?
Yeah. So it's a very good question. I think again it comes back to what I briefly discussed earlier on the performance of the business when you look at all the different levers. But you look at all the growth funnel, so your acquisition of customers, your activation of customers, your conversion, and then your retention, then your referral, right? And so as a business and through the life cycle of a customer, what's very important for us is, of course, the acquisition, because we want to talk to a lot of people, and we are very happy to grow the community of aficionado. So the acquisition, the conversion, because of course, when you're a customer, you really experience our products, so you really live our products and be our brand. But then what's super important is the retention. So we don't want people to come, have a fun experience and be like, cool, that was Maison21G, and then don't ever think about us anymore. We really want them to adopt Maison21G as a lifestyle, to become part of our community, to animate our community, to live with us, and to basically help us grow this business, to be complete shareholders of this business. And so when you create your own perfume, you're already a little step in. It's not like you buy something off the shelf that you can easily replace. It has a bit more of an emotional value because you created something that is you, that belongs to you, that is your own, that no one else own. But going a step further and making it authenticating the ownership of this perfume recipe, make you the owner of it, make you the landlord of this perfume. And so it's a way for us to build up a bit more, to go a step further and to build a bit more loyalty into our customer, to make them a bit more part of Maison 21G by owning part of Maison 21G, by owning their own recipe. And as I said, they can even, earn from it afterwards. So it has more than an emotional value.
How would they earn from it, for example? If someone else says, hey, I want the same perfume, then you will distribute a part of the profit of this perfume to this person who owns.
When you own the perfume recipe, anyone who then would purchase this perfume recipe, you would get royalties out of it.
Very cool. Okay.
So it's really to build up loyalty into our customer. That's really the main reason why we thought of this concept. But then there is, of course, a lot of other potential.
So a new side hustle for people out there in Singapore, in Asia, or actually now in Dubai, who want to build a side hustle is to go to the Maison21G
That's
shop.
where you should invest.
And then you build a lot of different recipes, you get the NFTs, and you just wait for people to buy your recipe, and then you're going to start to make passive income.
Yes.
Actually, it's very cool. It's very cool.
The more Maison21G grow, the more potential you can get from your NFT.
Is there something, are you thinking about something, so you said kind of like basic people, so the basic step is people build their own perfume, then they can kind of own the recipe. Is there something even higher, like a greater vision for all this NFT thing that you thought about, but that would be more difficult to implement?
Yeah, of course. So there's always a long-term plan in everything that we think about. I think this idea came to me at first because I really wanted to focus on retention and building up this community of aficionados, to have them part of the project. But then there is a lot of potential behind, and the idea is to create a marketplace, and that's where come Dylan, the co-founder, where we would build a whole marketplace where those NFT would be dropped, and where where potentially we could then retail any other rare exclusive objects from the luxury industry. So we start with perfume because it's our bread and butter. That's what we do. That's what we know. But later on, we potentially could provide this service for other brands so that they could build their own community a step further into their own brand and product. So that's one of the ideas. And then the next idea is also to work on artist collaborations, because at Maison21G we love to work with creators, because we are creators who create perfume, and so we love to work with artists that are creators in whatever field they do. And so, as you know, perfume is intangible, and so we really need to materialize it and to make it live. And so we want to work with artists whereby they would design something that would correspond to the perfume recipe. So the bottle, the packaging, the art itself, make it very artsy, of a very artsy representation of the scent. And then we could build limited edition, kind of very rare perfumes. So they would be like in a...
So play on the rarity of the...
Build up on the rarity of the thing. So exclusive collection with very exclusive kind of boxes, materials, and go a bit more in-depth and less mass.
Awesome. What's the best advice you've ever been given?
It's a tough question.
What's an advice that you think you've heard that is really relevant to your life mindset and that you think would be really useful for people to think about?
One thing I apply, and I think is very, very important, is really to take your time. Take your time doing everything you do. But that's again the discussion we had on, strategizing and not taking too much time. At some point you need to jump in the water, but take your time. Make sure that what you're going to do is relevant to yourself, is going to really move the needle to what you want to achieve in life, to who you want to be. Stay aligned with who you are, basically, and take a step back always, to build stuff durably and to build yourself durably. So take your time.
That's what I need to apply more, actually.
Yeah. Growth is good, but sustainable growth is much better.
I'm more the kind of guy who does the crazy growth, falls, crazy growth. Back basically it's called mean reversion. So you grow exponentially, mean reversion, grow exponentially, mean reversion. It's a bit more, it's a bit more crazy for the mental health and everything, but it's definitely a good advice to take from you. If there was a summary or key takeaway that people should remember from today, what would it be?
It's really to write down your objectives, write down your priorities. It's indeed take your time. It's basically take a step back, reflect on really what you want to achieve, if you want to achieve, and then retro plan. So look at 30 years, at 20 years, at 10 years. I mean, our life is very short, so let's make the best out of it, right? So let's maximize all the moments that we can have in it by basically planning a bit better. But that's also my weird OCD mindset to plan everything and to have control, to have basically boundaries in the mess that I create inside.
Thank you so much for your time, Max.
Thank you for having me, Kevin.
Thank you everyone for listening. A pleasure. Thank you everyone for listening and watching. Please smash the like button and give us your feedback in the comments. Highlights we will post on YouTube, Twitter, Substack, LinkedIn, and Instagram. And I'll see you all in the next episode.